Excellent. Now we're recording. Thank you so much. That's brilliant. Yeah. Okay. A reiteration. The agenda for today: spotting imbalances in supply and demand. We're going to have a look at defining and locating and qualifying price imbalances, and we're going to discuss the concept of parents and children, which we have done previously. But I think we should touch on this again, and we'll continue to do so in the future because it's a pretty important topic. Then we're going to look at the notion of what is currently driving price, and this is useful for us because it will help us know the direction that we should be trading in. And so you could be on a small time frame and think that you should be buying, but if you go on the bigger time frames, then it becomes very clear that we should actually be trading in the opposite direction. Just a good idea to pay attention to the bigger picture and ultimately what's driving price. Okay. So spotting imbalances in supply and demand. What is an imbalance? Well, an imbalance is simply a price when it is at disparity. So you have, for example, if you have a value, and the value is typically located between the range of 1 and 2, but all of a sudden it jumps up to 6 or to -6, then it is disparity. Parity is in the range between 1 and 2, so the mean, and any deviations from the mean can be considered to be an imbalance in price. And this is very clear on the price chart, as we'll see shortly. And so we want to be able to spot whether or not price is at parity or disparity for a given price move. Okay, so how do we spot these price imbalances on a price chart? Well, typically, before a news data, an economic data release, price will typically be at parity. It'll be consolidating sideways, and then the economic data will be released, and then it will either jump higher or lower. And this jumping away or deviation from the mean is ultimately price at an imbalance, a disparity. Then you have this, I put this comment here, are they all wearing the same t-shirt? Yes, they are, and they're torn. They should be very, very quickly identifiable by looking at them because they all exhibit very similar characteristics, and so it's very important that we can train ourselves, and luckily it's not difficult to do. And so we want to see short periods of agreement. So going back to last week's talk, we discussed accumulation and distribution. So we want to see accumulation taking place for roughly 3 to 5 periods, and we want to see this imbalance in price leaving parity immediately after this period of accumulation. And we want to see these strong pushes away from the areas of accumulation, again, as we discussed last week. I'm going to touch on that a little bit now, but we're not going to go into as much depth as last time, but you can certainly review the recording from last week. Okay. Cool. So spotting these imbalances. Okay, here we have a bar. Price is moving higher. It moves higher. So you can see price is really moving up here. So we have a keen interest in buying. Then all of a sudden price stops. So you have these really strong runs up to these small pockets of, in this case, bearish liquidity. So big limit orders here. Price stops. We see some selling. Price has an additional stab further up into the area. And we had a really big push away from the area. This is a price imbalance for this price structure just here. It was a balance here, and it left, telling us that now it is a disparity and thus imbalanced. Price will return to parity once it returns back up to this area just here. But this is all context specific. You can see here that this price movement up, this leg higher, left price at disparity. So there's probably an area of accumulation just down here. And so while this causes price to leave parity and cause an imbalance to the upside, this disparity or imbalance created from this move lower actually balanced this one, but it left price being unbalanced for this one here. And so these are all linked together. So price becoming imbalanced on one move was typically price rebalancing for another move. So this is just something we can pay attention to. It's very interesting. You see this really nice strong move away here. And we have another example. Price leaves an area quickly. We have a quick pause. We start to accumulate additional orders, and then price cuts away and moves very, very low here. So we have Well, up here we're going to have an area of accumulation up here and price left. So now price is imbalanced, and we're accumulating orders, and this additional push lower puts price at an even bigger imbalance. The first rebalancing will occur when price returns to this area of accumulation, and this whole leg down will be rebalanced when price removes to the accumulation that is located at the source of the move up here. Okay, so if we have a look at, defining and locating, qualifying these areas of imbalance, it's very important that we focus on the important areas. And I discussed again the notion of parents and children. And these are super important because once you've mastered spotting these or performing your analysis using the software or some other tool, then you'll really be good at spotting the parents, the real supply and the real demand, and not reactions to them. Because typically price will come down to the child. We might see a small reaction, but often it'll go through the child to the parent, which is where the real supply and demand is located, and that is where we'll see the reaction typically. And so when price comes down to an area of accumulation, we want to see a really nice push away from the area. So the move away is crucial for spotting the source of a price imbalance, because this is where we want to target for our entry. And so we have, again, the structure of accumulation. We want to see a fewer number of periods of accumulation prior to the imbalance. And this is, again, showing us that we have a big disagreement in supply and demand. Then we have the period of accumulation, and this is referring to the amount of time that passes during the accumulation phase. So we have price entering consolidation or accumulation, and then we want this period to be pretty limited. We don't want to see, for example, 10 hours or 20 hours of accumulation. What does this tell us? Well, this tells us that there's a very clear balance in supply and demand, which we do not want to see. We want to see clear imbalances. Okay. And so parents and children, asking the question, is this a parent or a child? And we'll go on a chart in just a second. This helps us differentiate between real supply and demand and reactions to them. And this is super important. And I've done it 100 times where I found this area and I thought, wow, this is a great area. I'm going to buy here or sell there. The price will come down to my area. It'll enter. It'll fill my order. It'll have a small bounce, and then it'll rip through it, hit my stop, and then stop somewhere else. And I think to myself, well, what the hell's going on? Why did it not stop at this beautiful area? Well, that's because price came down to the child, which is actually the reaction to the supply and demand, and not to the real supply and demand. So price went through the child, and typically stops will be located below children demand and above children supply, and it'll pierce into the real supply and demand, and then it'll react from there. And so asking this question, which I'll show a ton of examples of, as many as you like here shortly, will really help you focus on these really good areas, the parents, and not reactions to them. Okay, so if we, just for an example, if we have a look at actually there was okay, if we have a look at, where's a nice area? Okay, if you have a look at this here, you can see that we had this area just here. So price left, it accumulated for 1, 2, 3, 4, 5 periods, and then it sold off. This is pretty nice, and you can see that when price left this, it moved lower, we accumulated, and then it moved lower again. And price managed to hold away and continue to move lower without having the strength to come back to this area of accumulation. This shows us that, here we have a price imbalance, and it's broken into 2 sections. We have the initial imbalance, which originates from this high. We leave, we accumulate, we're accumulating orders to sell, and price continues to move lower. So the first rebalancing is typically to this, to the one in the middle, which is this one here, and the second rebalancing is typically to the one that's located just above, which price did roughly around here, just here. And so, when price has rebalanced a move once, Sometimes it will react on the second time, but typically it will move through it and go to the next price imbalance to rebalance. And so this is just a good example where we can see the price tested it once, we tested it twice, and on the next approach it went through it. And so, I mean, you can see nice reactions the first time, you can sometimes see nice reactions on the second time, and even the third time. But you have to pay attention to the way price reacts when it rebalances a given price move. You can see when price was out of balance, price came back up here, and we had only one period of accumulation. What does that tell us? Well, that tells us that there's a lot of selling going on around this area, this price nodule here. So we had a accumulation, then we shot below here. We took out this small continuation pattern, returned to the parent, and then price went a little bit deeper. You can see this one, the high is a little bit higher, so we're beginning to consume the liquidity available here. We had a deeper stab in here because the first test cleared out the lows here. We had another test, went a little bit higher, so now price has moved back to roughly this area. So we've almost consumed this liquidity here, available in this little pocket. And so price comes up and we poke through it because there's nothing there. And the next area that we could consider for a short here is going to be up in here from around here until around here. Okay. Okay, good. Okay, so parents and children. Just to finish this bit up, typically you can ask yourself a couple of questions. First, you identify a parent and a child, and then you can ask yourself the question, is this a parent or is this a child? If you can answer the question, it is a parent, and this is a good thing, then you can take the trade. If it's not a child, you want to see a good reaction. Like this one here, this is a really good reaction. We can see the price came up here, we accumulated for a very limited period, only one period, so 1 4-hour period, and then we left very quickly. And when price left, it really left. We had some super strong moves below and away from this area of accumulation. And so, okay, no, it's not. It is a child. What do? You go to section 2 and you say, okay, if it's not, how did price react the last time it left? Did we have a big reaction like we did in the previous example? And if you can say, yes, we did, and this is a good thing, then you can consider taking the level again, trading this area of supply demand again, keeping in mind that it is the second time back, and so it's lower probability. If we have a small reaction, as an example, it had price done this and kind of accumulated here for a while and maybe moved down just a little bit, then that would not qualify this, the reaction to be a big enough reaction to take the trade again. Okay, let me let some people at the door. Okay, good. And so if we look at a couple of examples, you can see that these are really cool examples. I mean, you have price form this area of demand. Here we actually have the parent and the child. This is a continuation pattern on the 1 hour chart. This is a half-an-hour chart. So price moved higher. It came back. It tested, and then it went flying up like this. It moved high, it took out this high here. So looking at this chart, you might think, wow, here we have a really nice area of demand. Price came down, we accumulated for 1-2 periods. We have this really nice candle formation, and then it went up higher. And so you would buy here, you'd have your stop just below, and you would cross your fingers and hope everything goes well. But what happened? Price went up, it came down. We had that initial reaction to the child, but the liquidity there is insufficient to hold price. So typically price will have to move in a direction of thinnest liquidity, so it finds these pools of liquidity which are down here, the parent. Here we have the parent. Price went down to here. If we go back here, you can see it's roughly at the bottom of this child, the top half of this parent. And this is where we saw the reaction. And so we had price moved away, maybe 2. So on this trade, we had roughly a 1 to 2 risk reward, which was pretty okay. So again, this is just a really clear example of taking the child in contrast to taking the parent. This would have been a beautiful entry. This is where we saw a really sharp reaction. I mean, we would have hit the target on this chart just in the first reaction alone, the first period. So this is a really nice example. We have another one here. We have this extended period of accumulation. This is a bad thing. Price rallies, we accumulate, we sell off, accumulate, sell off, accumulate, then we dump. And so you might think, well, we have a lot of green candles here. We have like one white candle here, another one white here. We're going to take the top one because this is where the move originated from. Sorry, we're going to do this one. We took the bottom one here, which is where the candle left. We managed to get close below these lows. We sold here, and price, we might even manage to get the risk out of this trade, but eventually price moved through it, we accumulated it, we moved through it again, and we went back to the area of accumulation, which is the parent. This is the parent, and this is the child, and this is a terrible child, kind of a horrible thing to say, a terrible child. But here we have a really extended period of accumulation. We have many bars, we have lots of trading. What does trading in a range do? Well, it's consuming, it's filling orders, accumulating liquidity, thinning out the area here. So on the next approach, price will typically cut through this like a hot knife through butter, which it kind of did. It managed to kind of wriggle through it. And then it found the real limit orders, the big orders, which were located on the just below this area of accumulation, of supply. We poked into it, and we had a continuation of accumulation, and then price finally broke down, and then it looks like this is a news-driven move just here. But again, an attempt to trade the child, price tore through it, went to the parent, and this is where we saw the reaction. And here we have another one where we had this extended period of accumulation. So we have the parent, we have a child. This is not a real child because we didn't really react to this, but it's located just below. And typically, if you have an area of accumulation, supply or demand, and just above it or below it, for example, either here or maybe just here, just above that, price will almost always go through it and go to the parent. And this is just an example of maybe a not picture perfect example, because they're rarely picture perfect, but this is just another example of accumulation going on, forming the quote-unquote the child area just below this parent. And so you would assume that because price left the area in a real hurry, that this would be the area to sell at. And that wasn't the case. And we have quite a lot of reasons. Number one, this is not a parent. Number two, we have extended period of accumulation. Yeah, and then you can also see how price just accumulated for a long period of time, and we started to react on this daily area here. So we're getting, we're seeing daily demand being formed just opposite our entry, which tells us that price is going to have a tough time moving lower because we have to consume this, we have to move through these big limit orders that are located down here. And so price went up. We poked into the parent. We had a deeper push, but I think that we would have probably survived because our stop would have been 5 or 10 pips above this high. This is where we saw the reaction. Yeah, so you can see that these are just really good examples of exactly that. And I've done it so many times where I've traded the child only to find myself managing the trade very aggressively or getting stopped out. So it's a good idea to focus on this. Okay, so if we just have a quick look at a couple of these, let's see. Okay, this is a good one. This is a trade I had today. You know, let me remove everything, so we have to do the work ourselves. Oops. Okay. Okay, so we have this 4-hour chart here. This is really messy. This is not a beautiful example, but we're going to use it anyway because they're really beautiful. But you can see how price left here. So you would think, okay, here we have the demand. So you can mark that off, and that's fine. Just mark it off. And you have to ask yourself that question, is this a parent or is this a child? Meaning, is this established independently of any other area or is it not? No, actually this is a reaction to this right here. And you can see that when price left here, it poked in as low as this low of this bar here. So we can mark off the low there. If we go to smaller time frames, you can probably keep doing that. And you can see how this is horrible here because we have demand, we have a child. So this is the demand. This is a reaction to this parent. Price moves away, so we have another area of demand here. Price tests the top of it, and then we start to accumulate like this. So we have a lot of nested areas here that don't really look that good. And so if we look here, we'll remove this 4-hour area. You can see we had that one that we considered on the 4-hour chart. Is that a parent or a child? It's a child. It's reacting to kind of this and this. Is a parent or a child? It is a child, and we actually have the parent down here. And this is not even a real parent because it's reacting at the highs of this just here. And this one is okay, but I'd like it if the move away was a little bit bigger, bringing this demand further away from this, because here we have one here. So these are pretty close to each other. And so we might want to be a little bit careful. We have this one here, and then we have, let me remove this, and then we have this one down here as well, like this. So we have all of these levels here, and price stopped here. So it went through this one, and it went to the area which is at least the older sibling for that. You can see that, okay, it was tested once, almost twice. This reacted on this child, and price reacted just here. So this is the one we saw the reaction on. This is also, I mean, we had a pretty nice move away. It was tested once. This was not a really great move away from it, but price did manage to move and hold away and then move above and beyond this area. This is not pretty, but we did see a reaction there. Sometimes you will, sometimes you won't, but it's just a good idea to make sure that you're looking for these solid areas, and this is not one of them. So I wouldn't even consider that. The trade that I took today, I'll just show you very quickly, was here. It was this, just here. It was a child level, but I was looking at strength information, so I was confident. And I bought just here on this pullback, so the 36.91 area. So right here, there was a 1-to-1 on the first half, and the second to one was, so the second position was up here. It missed my target by a few pips, so I clicked out at 137.34 minus about 10 pips. And price came back in here, and it reached the range for the day. Actually, it's already rolled over. It was 90 pips yesterday, and it was 90 for 90. So the 5-day average daily range was 90 pips, and the high of this bar here was actually 90. So this was the daily range right here, which is also another good reason to get out of that trade there. So yes, I mean, here you can see that, I mean, we could do this analysis. We go on, and you can see this is like really messy. Price has already been back to this level. We test this. We have a nice move away, test. I mean, the only real demand we have is kind of here. But I'd prefer that price would have left here. You can see how price went up and then kind of poked back into this. So it's not a super duper area. So this is kind of a little bit ugly. I mean, this trade could have lost, but I had to manage it aggressively, and I did so because this was a child area. And the reason this was okay, I thought, was because when it left here, we managed to close above this continuation pattern, which qualified this as a pretty okay area which to buy. Okay, Steve is asking, could that last chart have been a decent short idea? Which, do you remember what pair I was looking at when you wrote that? On the examples, yes. So was it? Do you remember? Was it the first one, the second one, or the third one? the second one. Oops, so this one here. Yes, it was. This was a fine short example. I can't see what was going on historically, so it's kind of out of context. But you can see that when this area of accumulation was formed and price left, you see the high of this candle right here. When price pokes up like that, it's consuming liquidity, which is not good for selling. So ideally, when price pokes up like that, I mean, our area, the area that we would want to, let me see if I can draw it in on my chart. You wouldn't want to be a prayer price that it's any sell for a price any cheaper than the high of that bar here. I don't know how far it went. It went pretty close to that, but it certainly went at least as high as that. You can see it went maybe actually it went up to just below the body of this candle here. And so when you see a price leave and then a spike up, I mean, that spike up, you want your entry to be at roughly that spike, because that's where price poked up to, found liquidity required to hold price and then move lower. So this is probably the place where price is going to react at next time it comes back like that. So just keep an eye on those little wicks. It's such a, I mean, with a bit of practice, you'll be noticing all of these really fine details in price, and these little wicks poking up and down and doing different things. They're all telling a story. And so a little bit of practice, and you'll be doing this stuff in your sleep. Okay. Super. So, yeah, so we had a little look at these. We had a look at the trade that I took today. That was somewhere related. But let's have a look at the concept of what is driving price. My pleasure, Steve. Thanks for asking. Okay. So, in order to know what is driving price, you have to look on the larger time frames. And I mean, I prefer to trade on the higher time frames because it kind of synthesizes the news, but you can do this on any time frame. So what I like to do is I like to let's just pick a pair. Let's see. Let's see something. Yeah, we'll take the dollar, Japanese yen. I'm going to remove this, so we remove everything. Remove all the lines, so we have to do it ourselves. Okay, so assuming the fact that we are longer-term traders, we need to know what's going on. So if we go to the 15-minute or the 1-minute chart, you can see that we're going up. So you might think that we should be buying. You go to the 5-minute, we should be buying. 15-minute buying. I mean, these are all telling the same story, which is good, but sometimes they're not. Sometimes you go here, you can see we're on the weekly chart and we're moving down, so we want to be selling. But if you go on a 1-hour chart, we clearly want to be buying. If you go to the monthly chart, we also kind of want to be buying as well. And so you really have to know where you are in relation to the bigger picture. And so what I like to do is I normally like to start on the weekly chart. Sometimes on the weekly, if I have enough historical price data. So you go to the weekly and you just kind of ask yourself, okay, what are we doing? What's going on here? And you can see that price is screaming higher. And it is. It's really flying. And so you want to mark off these areas of supply and demand and trend lines so that you are properly qualifying these areas of supply and demand. And if we consider for a second, we have this here. Price tested that, and it's reacting to that. So price is currently, well, it has for quite some time been moving off this weekly supply. You can see that price went down here, and it's reacting on something in this bar here. So we'll put a line in there. We're going to go to the 4-hour and see if we can find out what it is that price is reacting on. You can see that we were reacting on, maybe it's this here. Let's see if that did it. Yeah, so that's where we are now. So price touched on there. So we have price reacting on this 4-hour demand, and price is really reacting strongly. Just below that, we have a really nice continuation pattern that I think looks interesting. The price managed to stop here, and now we're moving higher. And so on the weekly chart, we're moving down pretty clearly. We have a downward sloping trend line, and this is how we like to define the trend. So you can see this. See that we are currently moving down, but you can see the price is actually, we almost have this candle opening, closing, and we have the high and the low above this trend line, which tells us that we're pretty close to breaking this trend line. Once price breaks this trend line, then we could look at this area just here of accumulation to show us the area of demand that broke the trend line, which is this one here, starting at the 111.50 area. So this one is responsible for breaking the trend line and consuming this. So initially we would have this area marked off. It looked like that. And then as soon as that area is consumed, then you would ask yourself the question, okay, what area of demand took out this supply? And you just move the rectangle. It's this one just here. And you move like that. So we have this. So we have a really nice area of demand that's currently driving price on the weekly chart, and we're just about to break this trend line. What does that mean? What does that even mean when we break a trend line? Does that mean we're in an uptrend? No, it doesn't. Not yet, because I mean, we had a downtrend, and now we have pretty soon, assuming that this week it closes above this trend line, then we have bearish consolidation. We are still in a downtrend, but we're having a bit of a breather until we can draw a trend line, an upward sloping trend line, a proper qualified trend line. Then we are still in a bearish consolidation. And you can see that we are just having a breather, so we expect price to continue lower. Where from? Well, probably from here or around here. So price is approaching that. Okay, so we know that on the weekly chart, we're looking pretty strong. We have weekly demand that's driving price. Price is moving high. We're about to break a trend line that shows commitment and strength to the upside. So we are looking pretty bullish on the weekly chart. We're bearish, but we can see some strength in the opposite direction. And you can see here something really interesting. You can see how price, it left this area of demand. Now it moved up. We had this nice green candle. We had 2 periods of accumulation. And then after price left here, we saw the break of the trend line. So that tells us that this area here, starting at the 112.73 area, is the area of demand on the daily chart. It's responsible for pretty much breaking this trend line. And so this is something we consider to buy at should price come back down here. But before we do that, we want to see what's going on in here. And you can see that we see this and we might think, okay, is this supply? It could be, so we'll mark this off. Before we do anything, I'm just going to mark this like that so I know. Sorry, I'll do that on the weekly so I know that's the weekly line. So go like that. We go down to the daily chart. Now I'm going to remove this so it's not so cluttered. We know the edge of the weekly chart is here. Then you can see just above we have these here. So we can go like that. We have this daily supply area just up here. Then you ask yourself, is this a parent or is this a child? Well, the best thing to do is to take a line and draw it above and then go back because it reacts. And you can see the price has been back to this high just here. And this is reacting on this. And you can see it's pretty unclear here. So we're going to have to go to a smaller time frame in there just to get a bit of clarity. And if we do that, you can see that we have the the supply up here. It's pretty messy, but price left and price came back to this one here. So actually this is the supply that is currently was tested once, twice, 3 times, 4 times. And this would be the 5th approach. Will it hold? We'll probably get a reaction down here, but if price manages to come up here, it's probably going to go through it and seek liquidity, which is located here. like that. That's what we have. And you can see that this candle poked up here, so you don't want to be paying a price, selling for a price any cheaper than the 115.63. And then you can see there's nothing above that. So this is uncharted waters, which is great, which means that price is going to have a tough time moving through here and an even tougher time moving through this and beyond this high. So the trade, if we're selling, which we are because we have a downward, we have a bearish bias on the weekly, would be to sell just around here. So if we have a look at that, you can see that it's at the big figure, the 1600 area. We're very far, we're about 300, just shy of 300 pips away. But you can see that we have plenty of room for a buy to materialize. We'll probably get a reaction here. And so assuming that we buy around here, we still have about 170 pips until we get to this area of supply here, which is a child. We still have to gnaw through this area of supply just here. Jose is asking, could the demand zone start at the gap just below of the weekly chart? Let's go and have a look. Oh, just here. Yes, it could, but it definitely. I mean, we have this one here, which is nice, and gaps likes to close typically, and we almost have closed. It looks like we've closed, but we need to take the area. Excuse me, got the hiccups, of a properly qualified supply and demand that is closest to price. Because if we say we're going to take this one, or we're going to take this one up here, then we're never going to get filled in any trade. So we have to find the qualified areas that are close to price. And this is a great level because it's taken this out, and also we gapped away from it. So when price comes down to the 10900, you could load the boat. Okay. So, but this definitely this is a very good area down here, simply because the way price left, and it's at the base of this gap. So absolutely. But for the time being, when we have some areas that are forming above this, and so these are the ones that we should focus on for the time being. And so we have all of a sudden a lot of areas popping up. We have a lot of strength. Price is leaving. Taking this out, we're moving higher, we're establishing some demand in the wake of price, and we've broken a trend line. And so we can do the same thing on the daily chart, and we can draw a trend line here to see what's going on. You can see that we actually have this trend line from here to here has been broken, which is great because this qualifies, like you say, Jose, this down here. So this area of demand is responsible for breaking this trend line, so causing market structure to fail, which qualifies this one here. So this is a good area to buy at should price come down. It probably will eventually. But we have this forming below price currently, and price seems to be moving up quite high. You see we're approaching these lows here, so we're probably going to maybe see a bit of a resistance around here. And price is pretty close to that now, the 113.50 area. And so if you go to the smaller time frame, the 4-hour chart, and have a closer look, you can see that price is getting pretty close to this and the top of this. So we're probably going to get have a bit of a tough time moving through. Let's just mark off the whole area, like this area here, like that. And we're kind of moving. We're starting to move through it now. So when price gets up here, we're going to run into some, support becomes resistance, and so we're probably going to slow down a bit. But you can see that when you start your analysis up here, you could see that we're about to break a trend line, which is good. So we have some upward momentum, but we still have a short bias. On the daily chart, we have another broken trend line, and price has been moving so strongly away from this area that we can't even draw a trend line because we don't even have any clear swings. There's no clear swings to peg a trend line on. So you go to the 4-hour chart, and we might be able to. We can do that here, I think. So we have an upward trend on the 4-hour chart, and it'll probably I mean, we could take from maybe here to here, or something like that, and you can see that we have a pretty clear upward sloping trend on the 4-hour chart. So we know that we have a lot of strength moving to the upside. It's very clear. I mean, you look at price; it's very clearly moving higher, and so we could definitely buy. But you want to be aware of where you are in relation to the major supply and demand. You can see we're getting close to the edge of this weekly supply, and we have some resistance here on the daily chart here. So we have to be a little bit careful. We're probably going to slow down here, but you could certainly take maybe some shorter term trades here on for example, the hourly chart until we start to run into the walls that are inevitably located just down the road. So here we have, on the hourly chart, we have an upward sloping trend line as well, which goes from this low to this low. And so there's a lot of stuff that we could do here. And so you can see that, I mean, starting on the weekly chart and focusing on where these areas are, it really puts you in the know, because when you get on the half an hour chart, you can see, okay, we have this area of daily demand that is being formed. We have a 4-hour trend line that is sloping up, so we have a 4-hour trend. We've broken this daily trend line. We have this weekly demand here and here below price, and we have some bumps in the road we have to be mindful of when we get here. And so doing this puts you in the know. You know where you want to be out of the trade, or scaling out of the trade, or getting the risk out of the trade. Yeah, we'll say getting the risk out of the trade, and you know where you want to be out of the trade just by looking where these lines are located. And so here you can see that price, we have this demand here that is driving price. And you can see that, I mean, there's a very clear situation being told here. We have this really strong demand that's just about to break this weekly trend line, and so for the time being, we can position ourselves long until we reach these greater period supply areas at the top here. William is saying here the difficulty is the boxes are so big, you must go to very small and then have a big move away to get their risk reward. It's true, and this is why it's a really good idea to zoom in or to zone in on an area, because you can have an area like this. And actually, let's look at the one at the top. We had this one on the weekly chart, which is super clear. You can see price rallied, and then it just dropped very quickly. And you can see that, I mean, price touched it, but you can definitely go into the smaller time frame and have a closer look, and you can see actually that we have an incredible pattern right here. And so you go from having a 300 pip stop to a 100 pip stop. So this is like 1/3 of that. And so it's always worth going to the smaller time frames to see if you can refine your entry, because this gives you a much better pip risk for your position. And this is a really nice pattern. Also, it's embedded in we have weekly supply, and inside that we have this lovely daily supply also. And so you know that when prices gets here, we're going to start to slow down. We're going to start to really have to fight to move up into this area. When price touches this area here, then we'll probably see price move up here. We'll touch this. We'll get price moving down. Then we're going to have price kind of moving difficultly up, poking into here, and then testing, and then maybe going down like that. And we're going to have currency strength divergence. We're going to have the histogram when this happens. We're going to have a peak here, then we're going to have a lower peak, but price is going to be moving higher here and higher here, but the histogram is not going to be showing the same development in price. And so this is going to be a very good clue that this area of supply is going to hold, and we should be selling. And so keeping your eye on the currency strength histogram will really help you assess if an area of supply and demand is going to hold or not. Okay, William is saying, okay, but it did return to that area. You mean this one here, or the weekly area? Okay, let me remove my pencils. Over to the right. Yes, I can give you the mic, William, if you like. Then you can. You want to do that at the lower one? This one here. Okay. The red, the top orange one. This one here. Yes, it has touched it exactly. Yes, the price has already been back there. I think you'll find that. The histogram here. We put that on there. You could see kind of the exact thing that we talked about. You see how we have a high, but the currency strength is going down, and so this tells us this area is definitely gonna hold, will likely hold. There's no definitely anything in this, but then you have this the green candle away from accumulation, and so the trade was just here. Yes, and so I mean this is, like you said, price has already been back to this level. So next time it comes, it'll probably want to have a look for some other orders, some substantial orders, and they're probably located at this area or higher, likely between the bottom, sorry, the orange line here and the red line here at the top. Okay, super. Okay, so you can see, I mean, really paying attention to what's going on in the big time frames is really going to put you in the know and let you know what you're going to want to do. This trade that we had on, we also sold here. Just here. Let me go to the 4-hour chart just to show. I think it was the 1-hour chart. Yeah, we sold just around here, just at here like that. So price came back, and you can see Histogram. Let's put this on there. You can see price is moving higher. Got a smaller time frame, we can see it maybe a bit clearer. No, it doesn't go any clearer there, but you can see here that price is moving higher, but the histogram is not really doing a whole lot. I mean, the peaks are moving lower. And so this told us that this area was likely going to hold. And this is due to fundamental stuff. We had the elections, and it was a trade that was held over the weekend, but it did materialize, but I wasn't sure if it was going to. I could only see that the strength information was showing me that the CAD was picking up in strength and the American dollar was losing strength. And so I was expecting this to happen. And so now you can see that, I mean, price is accumulating, which is, it's really, I mean, there's no demand in here. We have slight demand here, but there's no demand here, and there's no demand here until we get like to here or here or here. And so in the path of least resistance is going to be moving to the downside here. Also, the dollar CAD moves pretty nicely in the opposite direction of crude oil, and oil is really selling off at the moment. And so I was a little bit careful about holding this too long because I wasn't expecting it to continue to move lower, because the CAD is taking a beating because of the declining prices in oil. And so that was also something that played a role on this trade in particular. Good. Okay. Okay, I think I covered it. Does anyone have any more questions about this? These things, the material we've covered so far? I'm just going to maybe. Okay, Cecilia is saying here, depending on the time frame that you are looking at, the currency strength signal could change. So for example, if the currency strength of the 4-hour chart shows no clear divergence, what would you recommend to wait? Yeah, I mean, ideally, you want to identify the supply and demand areas first, and you want to use the currency strength to show you or give you an indication if these levels are going to hold or not. And so, I mean, we can use this one. This is a fine example. So the area of supply here, the daily, had been on the chart for probably, I don't know, 4 weeks. And so I had a pretty good idea I wanted to sell up here. Yeah, maybe about a month, at least a month, maybe 2 months in advance. So that was marked off. And it was actually a result of an analysis here on the weekly chart. And so we had this weekly upward sloping trend line. And the trend line was broken. Sorry, I drew it wrong, by this. So this area of weekly supply broke the trend line. So this was the area that I was targeting to sell at. So I knew for a long time, at least a month, maybe 2, that we wanted to sell when price got up there. You can just put a sell limit order in there and cross your fingers, but it's sometimes better to wait and see if you're going to get a reaction there, simply because price can often just do something entirely different. Also, the fundamentals play an enormous role on the way currencies move as well. So we knew we wanted to sell there, but we wanted confirmation, which we got a little bit of here by the decline in currency strength between these two currencies. And so, yeah, I would recommend waiting and then getting confirmation. My pleasure. Derek is saying, I was looking at the dollar CAD today as well and saw the sell limit at 37.60 with stop loss at 37.95. 37.60. Let's have a look at that. Do you remember what time frame you were on? Okay, I can see here. I'm maybe on this one here. This is okay. So just up here. Okay, let's have a look at that. Okay, you can see it pretty closely here. Yes, around 37.60. 37.60 here. So just that's fine. That's great. Also because of the this actually it's like, yeah, this is perfect. This looks really good here. And price did leave nicely, and we are reacting at daily supply, so there's a lot of reasons to expect price to continue moving lower. The only reason that I was a little bit uneasy is because of this. Got to get this oil. And you can see how oil had just been moving really quickly low, reacted this really nice area of daily demand. And price had been really selling off, and so I was a little bit careful. I'd be a little bit careful about buying the Canadian dollar. But what you can do is you can go on the crude chart like this, and you can identify areas here of supply. We go to the daily chart. I did this actually on in another profile. Let's see if I can bring that up here. Okay, so I did an analysis here where we had this weekly supply here. This is crude, really messy, but we had this drop off here, and so we have an area of supply just here at the 48.61. Price reacted at this daily demand, and we had a really nice reaction, and now we're starting to wriggle back up here higher. And so when price gets here, ideally you want the price to be reacting at an area on the dollar CAD chart. So ideally you want, what I like to do is I like to put the dollar CAD profile like this, where I have the crude chart have the crude chart and I have the CAD chart next to each other on the same time frame. And so I want to make sure that when price comes up to an area of supply, that we have a corresponding area of demand located in the same area here. This is really important, and so they have to be on the same time frame, which they're not at the moment. So I go here. You can see how this is moving down, this is moving up, and so it's really helpful when they do overlap, because especially if you have price approaching this area just up here, moving up here, and price is moving down to, for example, this area of demand here. I mean, that's just another good reason to buy at that area, because we have price which is probably going to react. Crude is going to move down, the Kiwi is going to move down, the dollar is going to move up, and so we're probably going to see a reaction here if price is at this area here at the same time, if that makes sense. And so if you're trading the dollar CAD, just keep an eye on crude. It's just a really good idea. Okay, excellent. Okay, so just to wrap this up, and then we can have some, my pleasure, Derek, we can have some questions, and I'll get Michael on here, and we can kind of have like an open dialogue. And so, okay, understanding the parent-child relationship will bring your eye to the real areas of supply and demand. And I think those three examples that I showed earlier were pretty good at illustrating that, because you can really see that if you have these child areas that are located relatively close to these parent areas, price will almost always tear through those and go to the source, or to the real supply and demand. And also, when you look at these imbalances in supply and demand, these imbalances on a price chart, they should jump out at you. You should be able to see, look at price and answer the question, is price currently balanced or imbalanced? And if it is imbalanced, then you have to be able to ask yourself, or rather answer the question, okay, where will price have to return to in order to be balanced? And that should typically be the area that you target for a trade. And so you want to see, if you're using the Pipnotic software, you want to see like high quality accumulation at the source of the imbalance. And this will typically be a period of roughly 2 to 5 accumulation candles, followed by that big green candle, or another green candle. It doesn't have to be green, the software doesn't get all of them, but you want to see a really strong move away, and you want to see damage done to either opposing supply and demand, or you want to see market structure failure when price moves away like that. Okay, and then of course, if you do your top-down analysis like we've done, then you can really see what is driving price, and this will certainly help you trade in line with the greater supply, or the smarter money, the bigger money. And doing the top-down is just a really good idea. And even if you don't want to do the top-down, you should just pay attention to the daily chart, mark off your areas of supply and demand, and just see what price is doing and where it is in relation to this daily supply and demand, because then you can certainly position yourself correctly simply by doing that. Okay, super. Okay, now we've gotten here. Are there any questions here? Let me see if I've got Michael in here. There you are. All right, I'll unmute you, Michael.
I'm here. I'm here. Yeah, I put it on mute myself because I had a few conversations I was carrying on. So
excellent. Excellent. Cool. Now I can hear you. That's brilliant.
Yeah.
Yeah, I mean, are there
all right,
any...
guys, your chance to ask Sir Reed now. All good questions you ask. All good questions.
Yeah, anything. There's no. I mean, there's no such thing as a silly question. I mean, ask absolutely anything.
Right.
So let me turn that off and get the chart up. There we are. Yes, and so I mean, someone asked earlier, Michael, if they'll have access to the dashboard here, the currency strength dashboard, and I said they would, but that's certainly something that that they have access to, and it does really enable you to trade slightly more clever than the guy sitting in the office next door, and it's simply because that you're seeing so much information here. This is This is the daily chart, 4 hour, 1 hour, half an hour, 50 minute, and 5 minutes. So if you want to go to, for example, the greater time frames, so you want to go to, for example, the position configuration, you can see here that the Japanese yen is just taking a hammering. And so ideally you want to be selling the Japanese yen. So whenever you're trading the Japanese yen, you should be positioning yourself short Japanese yen, and you could look to buy the euro, the American dollar, or the Canadian dollar in relation to the Japanese yen and the Swiss franc. So you use this information to choose the currencies that you're trading and the direction that you'll be trading them. So you find that pair, you drag it over, then you use the Pipnotic, the supply and demand software to show you where you want to get in, and you do your analysis, and then you'll be surprised, very surprised, as how much easier it makes it when you can look at the charts this way with this new insight. Okay, David is saying here, what would be the average amount you would have for a stop loss? I normally risk no more than 1% of my account, and this is because I'm a bit of a conservative trader, and I can't stomach 2, 3, 4, 5% hits. I don't have the psychological makeup that can withstand that kind of a hammering. But I can take a couple, 1, maybe 2, 3% losses in a row and still have like a pretty stable head. But you'll have to figure that out yourself. I think Michael will have some guidelines, and you can start with those. And I think very quickly after, you'll be able to kind of feel, after your first few losses with real money, oh, that's a little bit unbearable. Or if you feel comfortable with that, then that's good. Then you can perhaps stay where you are. But it's just a matter of a trial and error, I think, with position sizing. I like to keep things nice and round. 1% seems to suit my psychological makeup pretty well. And Jose is saying, do you ever go down to a 50-minute chart for an entry on a tighter level? I do, and as a matter of fact, I was doing an analysis with some people the other day, and I don't remember the details, but we're always looking at weekly, daily, 4-hour levels, monthly levels, and we went down we found the level the price reacted on the 1-minute chart. So you can really, really go down. And if you don't have any clarity, so let's say your long term is the weekly, your medium term is the daily, and your entry time frame is on the 4-hour chart, so you should be taking trades from the 4-hour chart or less. If there's no clear level on the 4-hour, go to the 1-hour. If there's no clear level on the 1-hour, go to the half an hour or the 15-minute chart, and keep going down until you find that level. And then you will learn to spot those levels, and they'll jump out at you. And sometimes you have to go to the 15-minute or the 5-minute chart to find them, but then you'll find them, and then price will come racing for 300 pips. It'll poke into your entry, you'll have 1 or 2 pips of drawdown, and then it'll go the other direction for 200 pips. It's phenomenal. And when you drill down on the smaller time frames, then you'll notice this happening a lot more often. Okay, Raphael is saying, would you say the entry for the trade, the dollar franc at 99.90 or not? Let's have a quick look. So okay, sorry, this one is marked off here. Yeah, this was today. I was looking at this. The dollar was roaring, the franc was taking a hammering, and I wanted to buy. This is a 4-hour area because of the color. Yeah, I was looking to buy here, but price never pulled back, and so this trade has expired. It's gone. So today it would have been great, but tomorrow it might not be valid anymore. But I was considering this today. I had the configuration on the day trading, and I could see that the dollar was racing, and the franc was pretty weak, and so I really wanted to buy. I couldn't get in, and I looked at this one, and I looked at this one, and then and then it got a little bit late in the day for me, and so I stopped considering. But this was like a level I looked at. I liked. You can see this one here. Let's just mark this off for a second. You say, is this a parent or a child? It's a child. The real level is here, and you can often see this because price will go up and it'll drop and then it'll go up again. And this is price has done that here. It went up and it dropped and it went up again. You can see that it's also feeding into this accumulation. So there's going to be there's demand in here somewhere. But I like this. I thought this was pretty good, and I thought the price is probably or likely not get past that because of the strength of it today. So I simply put my entry here, and I can't remember. I did something like that. Yeah. So yes, okay. It was the 09. So it's a little bit different. Maybe here. Yeah, something like that. So I was looking at that today. So yes, I certainly was. Okay. Do you play the big momentum moves, or do they stay away? Do I stay away from momentum trades? I really like momentum, and the currency strength is ultimately it's showing you where the momentum is. But I don't just click into trades. I used to when I traded the London Open and the New York Open, but I stopped doing that because, yeah, I mean when price. Let me show you what I was doing. Actually, let me show you my trading log for these trades. Because here are some of my trades, and this is how I used to trade, where I would do, I would look for something like this, where I would look for currency strength to diverge, and then I would see it leave, and then I would click in. And you see, I mean, I got filled here, and I got out of the trade here. And you can see the currency strength was diverging. This is the Aussie Swiss franc. And you could see that this pair was going to dump, but you can see the price I got in. I mean, I got in here. I mean, what a horrible place to have entered a trade. I would have rather, I would have rather have waited for price to come back, test the origin for this price imbalance. Again, you ask yourself, is price imbalance or out of balance? It's out of balance, and where will price have to return to in order to be rebalanced? Roughly around here. So it would have been better to wait for price to come back up here, test it, and then follow it further down. So I used to do that. Where's another one? Yeah, again, here we have the currency strength information here, and so I don't even know. Maybe this is like a very small trade. I don't even know. It's not very clear here. There's no session boxes here. This is pretty old because there was pivots on there. Where do we have another one? Yeah, here. Okay, this is, okay, so I mean you would see this, for example. So the reason I stopped doing it is because of this. Price would go like this, it would move away. I would see that there was divergence, and then I would click in here or click in here, get a really bad price, and then price would come back and rebalance before it continued. And so it's just a silly idea to just click in like that at market. So I started using limit orders and placing them at the point of origin for a move lower. Yeah, so momentum is really cool, and you're seeing that here, and you can use this to your advantage as information. You just need to get in at supply and demand, and you can see we have another one here, which looks pretty interesting. And I would have loved to have traded here, but price simply never came back at the time that I was looking. Okay, what advice do you give to someone who is still new to trading and will be using supply and demand strategy? I would say that I think just keep it simple and really try to avoid to overanalyze. Because if you can look at a price chart. Let's just delete most of this stuff. I would say that that you should focus on the bigger time frames, and focus and wait till price comes to an area and wait for it to show you that it's going to stop there or turn around or do something. Because typically some of the really good supply and demand traders, they're just selling, they're just standing in front of price, and they are ultimately picking tops and bottoms. And some of them do a really good job at it, but the guys that are doing really good at it have been doing it for a very long time. And so I suggest initially wait for price to show you where it's going to stop, or wait for something like this, which is a very clear imbalance in supply and demand. Price rallies, we accumulate, we move higher. When price leaves here, it takes out all of these highs. We take out this supply. So this is a nice area. Just really look for the really clear setups. that would be my best advice. I know that Michael trades a strategy that we're both familiar with that is pretty good, where you follow market flow on the 1 hour chart, and so you're looking for price structures. I mean, price movement similar to this. So price is moving up nicely. We have an area of demand, and then price comes back into and tests this area of this demand here. Actually, it didn't get any lower down than the high of here, but this is and then this ultimately held price, and it continued to move higher. But I know Michael knows a lot about this particular pattern. I know you've traded it quite a lot, haven't you?
Absolutely.
Michael, this
yep. Yep. Well, yeah, I used to do that primarily before you came into my life.
Yeah, it's a pretty cool very good pattern, and it's pretty objective. There are some really clear rules that you can answer yes or no to, and if you can say yes, market flow yes, oscillator or MACD or histogram yes, then there's a green light. And so it's really nice, I think, in the beginning to have something that you can technically perform without all the subjectivity which supply and demand sometimes can give you. So definitely try something that's more mechanical initially, and then move on from there. Because I think if you trade this particular trade setup that Michael is really good at, and if you do that for 100 trades, it'll get under your skin, and then you'll really understand it, and you'll understand why price does it, or why this trade worked and why this one didn't, and you'll understand that. When you have that intuitive understanding of that particular setup, then you'll be able to refine it and make it your own, and tweak it a little bit, and those small tweaks will enable you to. It'll really give you an edge. And also, if you have a sample size of, let's say, 150, 100 trades, you'll be able to look at a price chart, the indicators or the technical, the mechanical aspects of the metrics of the trade will say yes, yes, but you won't take the trade anyway, because that intuitive hunch will tell you not to, because you've seen that 17 times in the past, and last 17 times it didn't work out. And so those will really begin to come to the surface on a subconscious level, which is fascinating.
Right. We're going to explore those momentum trades. That's coming up soon, everybody, in your curriculum. So that's coming up soon. Yeah. The 1 hour chart, going down to the 15-minute chart. Yeah.
Yeah.
And we're going to use the histogram. I'm not going to use the MACD. We're going to use the histogram because it's far better, far better.
It's pretty amazing. Pretty amazing. Deanna is asking, hi Sarid, what do all of the colors on your candles mean? Yes, well, I can explain those. It's pretty simple. I mean, I have, I can just do this, and I can show you that there are actually only two colors. My candles are red and blue. So red are the candles that are moving lower, where the close is lower than the open, and the blue ones where the close is higher than the open. And then the indicator is the one that colors these candles. Let me remove all this stuff so we don't have so much noise. Like that. And you can see that we have white candles and we have green candles. The white candles are accumulation candles, and the green candles are extended range candles. And so the green candles show us where there is a pretty good move away, and the white candles are showing us where we have the accumulation of orders. And you can see here we have a green candle, and before that we had these white candles. Price comes down to these, and this is where it reacts a little bit before it continues moving higher. And this is what we like to look for. Here we have green candle, white candle, green candle. So this is an area that you could consider to sell. Here we have another white candle followed by a green candle. So this is an area you could buy. Not a good one because we have all of this chop that we discussed earlier. But here we have green candle, white candle, green candle. This is accumulation. This is a nice area. And so it just simply shows us where we have accumulation of orders, which we discussed last week, and really strong moves away from that area of accumulation. Okay, Brian is asking, would you short the dollar franc now or wait for it to drop and retest? It is in the 4-hour supply zone. Lots of white 1-hour candles in April. Also, what is your trigger to want to trade long today? Yes, we can have a quick look at that. Well, ultimately my trigger to trade long, the currency strength was telling me to buy, so I wanted to buy. I normally look at this before I choose a currency to trade. I don't say, okay, I want to trade the Aussie American dollar because I like the Aussie American dollar, because it doesn't always make sense. If you consider for a second the Aussie American dollar here, I mean, it's moving sideways, so the currency strength for these two currencies is probably pretty similar. And so you want to see something that's diverging, and you can see this pretty clearly on the euro, Japanese yen, for example. So if we have a look at that, euro, Japanese yen, just here, this pair should be roaring higher on the higher time frame, which it is. You can see it's really moving higher here. And so today on the dollar franc, the strength, you can see what it did today, but the dollar was on fire, and the franc was selling off, and it still is. You can see it's still pretty weak across the board, and so I wanted to position myself long, and I just simply didn't manage to get filled today. You could sell at the top, but I would be a little bit cautious about jumping and trying to pick a top, but you could, we have something up here, just there. We're getting pretty close to it. It's been tested once. It's also the big figure, so we might get a reaction there, but I'd feel more comfortable waiting until price came down here or down here and seeing what the strength information is doing then, or I wouldn't even look at this and just wait and see what the currency strength information is doing, or just go to one of the pairs that I like and do like a solid top-down analysis and trade supply and demand based on reactions to these areas. And here I use the histogram extensively. I hope that answered your question, Brian. Excellent, excellent. But how are you guys getting along? Is it an exciting journey? You enjoying currency trading? You having success? Are there any things that you're having like a deal of trouble with? Yeah, it is very exciting. I agree. It is. It's pretty amazing. It's pretty amazing. You guys are very, very lucky. It's really awesome that Michael's doing this. I wish I would have known Michael a few years ago.
I wish I would have known you when I was losing money. I wouldn't have lost so much. Once you get the hang of this, I sometimes say, Sarit, to some of these guys, I say it's like if you ask a brain surgeon, is your job easy? To them it's like they do this over and over and over. To them it's not that big a deal. You have to learn this skill. Once you learn this and you do it over and over consistently, it becomes like getting up and getting dressed and taking a shower. I mean, it becomes so routine to you. You understand the market, you feel the market. You just have to put in enough screen time. It demystified basically when you understand how to trade. You just got to practice it and practice it.
Yeah, it's true. It really is. And also, it doesn't come easily. I mean, trading currencies is a profession. I mean, doctors. Yeah. I mean, yeah, and exactly. Unfortunately, I think most people here will agree that if you search for currency trading on Google, you'll get a lot of stuff like $1,000 today or this robot did that, and it's and so people have these crazy unrealistic expectations.
Difficult. Correct. And there's people here on this webinar tonight that I hire them. Then they tried this, they tried that, they tried this, they tried that. And there's just a lot of garbage out there, and you don't know what to buy into, what not to buy into.
Exactly. It's tough. It's a pretty tough market to navigate in. So it's really good to find a mentor pretty early on, so that you can maybe have a bit of a shortcut to the real stuff.
And from all the heartache and the losses,
Yeah, definitely.
But we got some people here,
Yeah, it just does take time. It just takes a bunch of screen time. But the more you look at the charts, the more you understand it.
Gary, a couple guys, they've tried it. It's been difficult, but they're here now. So they're going to do well now.
Excellent. Well, I'm pleased I can see a lot of really positive comments there. It is like a fascinating study, I think, price, and also it'll really teach you to pay attention to detail, because I mean you have a successful trader and an unsuccessful trader. They're looking at the same thing, but one is able to extract money from the market and the other one is able to put money into the market. And what's the difference? Well, the difference is that one of them pays incredible attention to all the detail that is provided here in the chart, and there's a lot of detail in here, but one person A sees it and person B is completely oblivious to it. And so spending time looking at it and seeing what happens, or for example looking at this, for example, and going back in here and say, what did this look like? Why did price stop like that here? What did it look like? And then going down to and examining this and looking at that pattern and taking a snapshot of it, a screenshot, say, okay, then put that in the folder, and then going down and looking at this one here, or this one here. Why did price react the way it did at that level? And then you'll very quickly begin to see these patterns and say, oh, okay, I recognize that. That looks like this one, and that also worked over here. And so eventually you'll be able to you'll see these, and they'll jump out at you. Steve is saying, I'm very curious to see how my knowledge of equities will translate into currency. Do you have an equity experience? I don't, unfortunately. I'm a bit of an autodidact. I mean, I didn't get into trading because I wanted to learn how to trade. I mean, my background is IT security, so and I still work with IT security because I really enjoy it. So I do a lot of software testing, like computer hacking for banks, and they have a bunch of trading software and hedging software and APIs that they want to make sure are secure. And so I actually got into trading via a work project for a major European market maker, where I had to test a trading platform similar to MT4 and try and abuse it and hack it. And so I was put together with one of the traders, and he taught me how to use the functionality. He taught me what the limit orders were and all the different order types. And I thought, wow, this is pretty cool. And he said, there's actually an API and you can program stuff. And I was like, oh, really? Do they also do that? And that's how I kind of got into it. So I started programming software for currency trading, and so my knowledge of the markets actually came as a spin-off from doing software development. I didn't have any intention on wanting to trade, but it kind of came secondary. Yes, it's pretty cool. I still spend a lot of the time in the banks doing a lot of security work, and I love it. And it's cool because I get to see like what are the some of the biggest banks in the world are doing, and they have these bleeding edge trading platforms that they sell for, I mean, dizzying amounts of money, and most of it is crap. And you think like, wow, man, the stuff that we talk about, supply and demand and currency strength, it's light years ahead of it. And I think, wow, man, it's like, and they still have like these really sophisticated, beautiful platforms, but they have like lagging indicators that you can put on there, and that's the only form of analysis they allow their traders to use. And I think like, wow, that's phenomenal. It really shocks me. And actually, as a matter of fact, I've yet to find one that provides anything like a trading platform that provides any real value. The only value that the institutions can provide for their traders is the research that their economists are able to create. So they create a research based on fundamentals, but based on like the Big Mac figures, PPI, all these figures, and this creates like a fundamental directional bias for a currency. And they give this research to the floor traders, the guys that are trading the institution's money, and they position themselves based on the input that they're getting from their economists. And they're getting in normally at like pretty bad prices, and they kind of clicking into trade saying, okay, we want to be long this currency, we want to be short this currency, and they kind of get in there rough kind of, I don't know, they kind of click into the market, sometimes these weird areas, but they have these huge stops, and they know that over time the fundamentals will play out and this trade should theoretically work out, and sometimes they do, sometimes they don't. But trading supply and demand, I mean, you can get in to these trades, and there's virtually no drawdown. Like today on that CAD trade that I did, I mean, there wasn't even a pip of drawdown. I got filled, the spread was hit, and that was it. Boom, then it went up. And that's the magic of supply and demand. It's phenomenal because you really, it's like looking under the hood of a fine automobile. This is really, I think, looking under the hood of the currency market. So unfortunately, I can't say anything about equities. I wish I was a little bit more of a generalist and knew more about the market, but I really don't know anything else about anything else but currencies. Michael is saying, how do you set up your chart to get different colors?
Yeah, molten.
Oh, molten, sorry. There's molten when you right-click on the chart like this, and then you go to the properties, and then there is all the settings here you can define. And I like Dodger blue. I used to have a white background on my charts, but it was a little bit intense in my eyes when I was looking at the chart for so many times. So I simply put a dark background, and this makes it a lot easier to look at. And so I put, yeah, just blue and red. I think my son actually chose the colors, the blue and the red. Yeah.
Sareed, I think molten might be meaning he doesn't have the extended range or the accumulations. It's possible that he hasn't updated the license key for May, and it's just showing red and blue. That's what I'm thinking. I'm not sure. Maybe he should clarify, because they were given my template, which has all the colors set. So I'm thinking maybe he doesn't have the license.
Oh,
yeah, he might not have changed the license for May, and so all he's seeing is, you know, the red and the blue.
Okay, that could very well be.
That's what I'm thinking.
Yeah.
In which case, we sent it to him. Maybe he just didn't update it in the license key. He just has to be shown how to do that. That's what I'm thinking. Molten, is that correct? Is that not correct?
Yeah, he says it's correct.
Yeah.
Yeah.
So Mario will we'll get you that mold. I have the code. Perhaps you didn't get the code when we emailed it out. But if you need a walkthrough to get it, and tomorrow night you're going to see Mike Lee tomorrow night at the office too. He can help you with it, or we can help you with it later on, whichever you like. So you see the extended range, and you see all the accumulation activity.
Cool. Derek is asking, how do you change between the different currency strength charts? Well, I stopped using. I don't use this currency strength anymore. You can see here, like this stuff. I don't use this anymore because it's not showing me enough information. Well, it is, but it's showing me it's limited information, and so I wanted to go away from that. And so now I use this to help me position myself in relation to two currencies. And so, I mean, this is just an indicator that you can drag onto the chart like the other one. And the other one maybe is this one here, the histogram. And so, is that what you mean, Derek?
Momentum trades. Use that rather than that. Incredible.
Oh, the text chart. I'm not sure. Ask, hey Mike, do these guys have the text, this indicator?
No, Sareed, they don't. All they have is the histogram. I mean, and we haven't really even covered the histogram yet. That's a couple classes down. We're going to get to that.
Okay, cool.
I haven't really even touched on currency strength, so to speak. We've kind of discussed it a little bit, but when we get to that, we can give them all that, you know, as need be.
Excellent. That's perfect. But ultimately, the histogram here, it's a currency strength chart. It looks like MACD, but it isn't. It's showing the difference between two currencies. So instead of having a line that's the Swiss franc and another line that's the Japanese yen, it's taking the first currency, which is a Swiss franc, and it's subtracting the Japanese yen, and this is the difference. So you can actually see the difference of these these two prices, which is all we need to know, which is all we need to see. Because you can see pretty much when it's above the zero line, you want to buy. When it's below, you want to sell. Roughly said. Yeah, Jose is saying, notice that green represent volume, which you refer as an expanded range candle. Am I correct? Yeah, there's, unfortunately, due to the fact that the currency markets are so decentralized, because everything, currencies aren't traded via one central exchange. They're traded via hundreds and hundreds, if not thousands, of brokers all over the world, and so volume information is not very accurate. If you have a really big broker with tons and tons of clients, you can get maybe a more accurate volume reading than you can with a broker who has very few. But I don't even look at volume information simply for that reason. For stocks, you certainly can, because you have the central exchanges that the stocks are traded via. But for currencies, it's a bit different, so I don't look at those. But these here, these are simply extended range candles, and volumes. This is volume that you can see here at the bottom of the chart. But as I mentioned, I don't use volume. Excellent, super duper. Does anyone else have any? You have the momentum meter. Oh, cool. Yeah, that's right. That's this one here. Where'd that disappear to? I haven't used that for a long time. I can see it's down there somewhere. Oh, there it is.
Another one of Sareed's indicators.
Jeez, yeah, been busy with those.
That's an old one. That's an old one.
It is. This is pretty old. Another toy. Yeah, I've tried to kind of streamline stuff. It's pretty useful, this, because it's showing the development in price in relation to the range. Yeah, but I don't use it so much anymore. But it's a good indicator. It works very well, and it can be used in place of traditional oscillators like MACD or stochastics or RSI or anything like that. And it shows similar information. You can see that when it shows similar information as this, we had the divergence here, which you can see here as well. But this information in the momentum meter is taken from this chart alone, where the information in this indicator is taken from all of this. And so it's drawing on a much broader base of data, and so the information available in the histogram is much more profound.
The other one is
excellent.
And with them only using one currency a day, they're going to just know that currency.
Cool. Do you guys have any other questions? How's the weather in New York, Miami, and Philadelphia?
It's chilly. It's chilly in New York right now. It's about in the high 50s. It's going to be a cool week here. Cool week.
Is it? Okay.
Yeah, probably down in Miami, it's probably 80 degrees, and I don't want to even hear it from people down.
Oh, Miami. Yeah, David, rubbing it in there. Oh, look at that. Can you attach some sunshine?
It's always sunny in Miami.
That's so cool. Man, I'd love to live in a place like that where the sun always shone.
What's the weather in Copenhagen?
It's pretty fresh, actually. I mean, blue sky, but it's cold. But it's not freezing cold. I mean, you have to wear a coat, but there's no hat and gloves anymore. That's a thing of the past, luckily. But now, you know, the blackbirds are singing and the sun's shining, but it's a bit fresh. You can sit outside at cafes, you know, and have a coffee. There's no risk of catching pneumonia so much anymore, but it's pretty touch and go still. I mean, we don't really have any. In August the weather's pretty good normally, and June, July pretty touch and go, I'd say. But at the moment it's pretty okay.
Sareed, when are you coming to Montana? In July, you said?
Yeah, I'll be in Montana. Actually, we're flying into Seattle and driving to Montana, and then we're driving up to Canada, and July we'll be there.
Okay, that's I thought you said July. It's going to be really hot then.
Oh yeah, it'll be baking hot in Montana. It's crazy there. Yeah, ruthless summers and ruthless winters. Minus, what was it, minus 20, minus 30 in the winter, and like 105 in the summer. It's crazy stuff.
Any other questions, guys? Seems like maybe we've run out of questions here. Cecilia, any more questions? I love Cecilia's questions.
Yeah, totally.
You're funny. Well, Sari, maybe you can wrap it up. It seems like everyone's questioned out.
Yeah,
we have a
good.
class tomorrow night, so probably get a lot of questions.
Yeah, super. We can just round it off. But if you guys again have any questions, hey, thanks everyone so much for being here. I know it's a long time to stay glued to the screen, but I really appreciate you being here, and I'm always excited to talk about this stuff.
I appreciate you, Sareed. I mean, it's after midnight where you are, you know, and I mean, I tell them, you know, you don't have to do this, you know, and so it's well appreciated.
I really love it. I love it. But if you guys have any questions, like after you've consulted with your pillow, you can send them on to Michael or myself, and I'll gladly get back to you. Sometimes also I do some small videos to help kind of clarify things, because an email with a bunch of text and maybe a screenshot isn't so illustrative. So I find that making small videos always seems to help.
And guys, I'll upload the recording of this tomorrow.
Yeah, my screen's flickering. There we are. That's better.
There we go.
Excellent.
There we
go.
Super.
Good stuff. Well, we'll call it a day. Okay, actually, Brian is asking here, seems my trend line does not change colors on the different time frames. Any idea? Yes, you probably, just to make sure that it's enabled, you have to set enable manual trend line management to true. And if the markets are closed, then there are no ticks coming in, so then it won't do it. Then you have to change from one time frame to the other to do that, because every time a tick comes in a new price, then that's an event, and the software is reacting every time a new tick comes in. So try that, Brian. Excellent. Well, I think we'll call it a wrap.
Hello. Yeah, give me 2 minutes, all right? I'll call you back.
Give it It could, yeah, maybe. Do you have the product key for this month?
Brian, I'll look at it tomorrow. I'll see Brian tomorrow. I'll look at it tomorrow, Brian.
Perfect. Excellent.
Yeah, I'll see Brian tomorrow.
That's perfect. Cool. Well, excellent. I'd like to thank you guys once again for your being here. I really appreciate it, and I hope you found this material interesting. And we'll do more of these in the future.
Thanks, Sari. Thank you for everything.
Hey, thank you, Michael. Absolute pleasure. Absolute pleasure.
All right. I wish traders, I'll see you in the next few days.
All right.
All right. Thank you.
Hey, thank you, everyone. Take care.